Government cloud solutions provider SAIC out with earnings this morning, beating Wall Street estimates and boosting its full-year forecast. Joining us now to discuss, we've got the CEO Toni Townes-Whitley on with us ahead of the call. Toni, thank you so much for being here with us. So obviously, the numbers coming in strong. What do you attribute that success to for the quarter?
Well, thank you for allowing this time, Madison. Look, a couple of things. We've been ramping up on new business, and that ramp up has shown itself in some solid program execution. We've had some on-contract growth where we're expanding existing contracts. And so we feel this is about the range that we gave the street prior, and we feel like we're right in the middle of that range and moving forward to a strong H2.
You know, you've reported second quarter organic revenue growth of 2% year over year, talking about increases from new business wins, contract growth as well here, partially offset by an approximately 5-point headwind from contract transitions. I just wonder what you're seeing in the contract negotiation process right now as that flows through to some of the closings of deals, which has sounded like from other CEOs, it's been an elongated cycle at this juncture.
Well, look, the procurement cycle generally involves obviously the bid, an award, and generally a protest period. And that adds to that cycle, and protests, even pre-award protests, we see more of those that can extend that cycle. But I think the key thing is on transition, the ability once you win an award to get to a solid transition. And we've had some deals, even a recent win that we have within one of the combatant commands that was just announced, that a significant win that we will have an immediately and hopefully very strong transition period. So I think most companies are focusing on that first 6-month transition with new awards and how quickly you can ramp. And you see some of that in our results for the second quarter and what we expect for H2.
Yeah, I see. To put a number on that, during the quarter, you were awarded about $250 million of contract awards by defense and space organizations. That's a pretty penny for the company. I'm curious how you are thinking defensively from a balance sheet perspective about the upcoming November election and the degree to which whoever ends up in the White House come November could have policy positions that change the outlook for defense spending moving forward.
Look, I think the way we look at the elections and the impact of that, we're having conversations even with our board on that topic this week. In effect, our portfolio is broad and is really balanced, if you will, on the defense and national security side. Given the threat that we see globally, we expect political support for defense spending to continue. There'll be some pressure, as you know, on the fiscal backdrop, but we expect that to continue. And we're positioned in areas where specifically the preparations for what is called the Great Power Competition, as we prepare for the Indo-Pacific region, we're actually really well positioned in the areas where DoD is putting their dollars as well in mission IT and enterprise IT. On the civilian side, if you look at the agencies where we're focused, Department of Transportation, Department of Homeland Security, State Department, VA, these are agencies that there's bipartisan support for going forward. And so we feel like we've got a balanced portfolio on civilian defense, independent of the results of November. We feel like our portfolio can carry us to the growth that we're expecting in the shareholder return.
You know, it's really interesting, especially given what you're tracking and what we're set to hear about, as Maddie was bringing up. This going into this general election is about more globalization or deglobalization, depending upon who's talking about it, and how that could also mean more geopolitical pressure. How does that play through to your business as well in this near term?
Right. So if you think about that in the near term, we are focused on very key national imperatives. On the national security side, around what we call all domain warfighting, undersea dominance, the use of next generation space and capability. So on the defense and intel spending, with geopolitical conflict that we've identified and that is obviously continuing, we see that as an ongoing demand signal. We continue to bring capability. We're an integrator, a mission integrator that integrates technology from a startup all the way to a hyperscaler, large cloud provider. We integrate, we plug and play. So in that environment, as an integrator, there's always a demand signal for us to continue to integrate and bring the best technology to the Department of Defense and to the intel agencies. And then on the civilian side, again, we find ourselves with State Department, with Department of Transportation and others, we still see a very solid demand signal there, even in the geopolitical environment that we're in.
SAIC CEO Toni Townes-Whitley. Toni, thank you so much for taking the time here with us this morning. Appreciate it.
Thanks, Brad. Thanks, Madison. Appreciate you.